Bitcoin trend analysis, January 1st, 2026, Thursday. The new year begins not with a bang, but with a tense and ominous silence. The market has carried over the brutal, unresolved conflict from the end of December, and the price is now coiled like a spring, preparing for its first major, violent move of the year. This is the final calm before the storm. Looking back, the past month was a bloody landscape of failed trends and vicious, liquidity-driven chop. This is perfectly captured by the predictive indicator below the price, which painted a series of violent V-shaped reversals. Sharp blue ascents were crushed by equally sharp yellow descents. Now, as the new year opens, that indicator is once again attempting to turn from yellow to blue, signaling that the bulls are trying to mount yet another assault from the lows. But it is a weak and unconfirmed signal in a deeply conflicted market. Today, Thursday, January 1st, the session is defined by this extreme compression. The price is locked in a razor-thin range, fused directly to the white moving average around the 88,200 level. It is being squeezed tightly between the upper red and lower green Bollinger Bands, a classic sign of immense energy being built up before an explosive price expansion. The liquidation heat map provides a chilling glimpse into the battlefield. The price is hovering on top of a massive high-volume node, a true line in the sand between 87,300 and 88,300. Just above, a formidable wall of short liquidations sits waiting between 89,300 and 91,300. Below, an equally tempting pool of long liquidations waits near 87,300, and then, in a larger cluster around 85,300. The market is perfectly balanced between these two powerful magnets, ready to spring. The volume speaks with profound silence. The massive purple spikes that defined the recent conflict have vanished, replaced by a holiday whisper so quiet it confirms that both armies are waiting for the first major catalyst of the year. The best trading strategy in this environment is one of extreme patience. Trading inside this high liquidity chop zone is a low probability gamble. The highest probability play is to wait for a confirmed high volume breakout that targets one of these major liquidation zones. The probability of a sustained trend emerging from this exact spot is low. The probability of another violent liquidity hunting move is exceptionally high, conditioned for continuation. For a new bull trend to be confirmed, the bulls must force a decisive high-volume breakout above the white moving average and launch a sustained assault on the massive short liquidation fortress, ultimately breaking through the 89,300 ceiling. Condition for reversal. If this current recovery attempt, signaled by the new blue line, fails and the price breaks down below the consolidation floor near 87,300, it would invalidate the bullish setup. This would almost certainly trigger a swift and violent cascade down, a hunt the long liquidation clusters below, confirming the bears have won the first battle of the new year. If you're enjoying this video and want to see more just like it, make sure to hit that subscribe button. It's totally free and helps us keep creating awesome content for you. Don't forget to like the video so we know you're loving it, and drop a comment to let us know your thoughts. We read every single one. And if you think someone else would enjoy this too, hit that share button and spread the love. Let's grow this community together. Thanks for watching. You're the reason we do what we do.